Hello traders and friends. I'm going to first talk about a correlation between gold, bonds, and Bitcoin. You wouldn't think they were all interrelated, but right now they seem to be somewhat interrelated. And here's what I want to point out on my intraday chart right here. About 115, about 115 right through here, bonds were up all day, but they bottomed out again intraday and they continued higher, while the gold just went sideways. And you can see what I'm saying right here. About 115, bonds bottomed out and then they continued higher, but gold didn't. You come over here to your Bitcoin chart. Bitcoin sold off hard overnight. They were over 1100 and now they're back down to 985. And right here about 130 or 115 or so, it stabilized on price, quite possibly for another move higher. But my point is, once the Bitcoin seemed to stabilize, the gold seemed to stabilize too with it. So you may want to keep a close eye on this, that the action in the Bitcoin might be a better gauge for gold action than what bonds are actually giving you right now. Okay? Yesterday, the Federal Reserve came out with their minutes, basically saying everything they've been saying so long, thus far. And I think a lot of investors thought they were going to raise interest rates faster, but they pretty much came out and said they were not going to get in a big hurry raising rates this year. And yesterday, the reaction was muted, but we had a continuation lower in the dollars off that news, and the bonds catching a bid. I think a lot of investors had thought a much more rapid interest rate cycle than what's actually going to happen. And so we saw the dollar side starting to fall off here. As you can see on this chart, what's happened, the dollar clearly broke the uptrend today and continued selling off. And there's really no real support to this move for an equal move lower tomorrow. Now today we had that big move on the break, and the market's held up fairly well, even on the dollar sell-off. So if we need to see continued rotation into the Nasdaq, because that's what we had going on today. We had rotation instead of a sell-off. We had money coming out of the banking and the Trump rally stocks, and we had it moving back over into the Nasdaq and driving up those indices. The yen is another currency we need to start being concerned about, because we had a massive uptick today in the yen, and this is our carry trade, and whenever this starts to unwind a little bit, then that means that all the businesses that have taken loans out in yen denomination, they have to start unwinding their loans, or either that, or they're going to have to start paying their expense for the loan is going to dramatically increase because the yen's starting to turn direction. The Nasdaq had an impressive rally today. We in just 2 days have just done an amazing job coming back up to the top of the box it's been in. Now it's really going to be interesting tomorrow to see if we're going to have investors step up to support the FANG stocks, considering we're probably going to have continued weakness in the financials. So we're going to have that yin-yang counterbalance to keep these markets afloat. It's also important to note that the S&P is right up here next to the top of its range too, with possibly giving us a breakout to near all-time highs or better. Here we are on the diamonds, and they've been talking about Dow 20,000 forever here, but we're right on this trend line. This is the fourth test of it, right at the 20 SMA, threatening to break down with a Bollinger Band squeeze, with a negative divergence on the MACD. So there's a lot of signs there of some bearishness setting up here, and it'd be fairly easy to go to the downside and a lot harder to go to the upside. Now on the flip side, your NYSE, your broadest measure of the markets, it's right here trying to break out the all-time new highs. We put in a high today on the NYA. Okay, so keep that in mind. You know, you want to think you're bearish, but then whenever you see the broadest index of the markets, it's trying to put in all-time. It actually put in all-time highs today. Some other small trends I want to talk about: your metals and mining index with your your U.S. steel and stuff. It's right back up here after Schnitzer Steel reported today. So it really looks like it's trying to break out. On your flip side, your semiconductors, which have been really bullish during this part of the Trump rally, or your semiconductors, they're kind of just hanging. They crossed below the 20 SMA today, and they're below the 8 SMA too. So they're kind of consolidating here. They haven't broke down yet, but something to keep on watch. Crude numbers came out today at 11 o'clock. It started selling off right before the numbers hit, and then when they actually did hit, it went down just a little bit further, but rallied back up today above yesterday's close. So it's kind of bullish on the crude numbers, especially, you know, you had a weaker dollar today too to help support the crude prices. So we'll see what happens with that. Some areas that really got hit today: the apparel retailers, Kohl's and Macy's really had horrible sales for Christmas, and they just take it completely on the chin today. That was one of the major ones. And surprisingly, your automobiles, after having such a good run yesterday, they came down after a Trump treat with Toyota and a plant in Mexico. I think it had a lot to do with it. We also had a decent pullback in the airlines, finally. And then your gold miners were really on fire today. I'm thinking the bonds, if the bonds continue to rally, I think the gold's going to catch a bid. But I also think the Bitcoin issue is also a driving force for this. So just keep that in mind. I would not be surprised to see gold flat to lower tomorrow. And the last one I'm going to talk about here is the hotels and lodging REITs and stuff. They were catching pretty good sell-off with the rally in the bonds and stuff. So, and I want to point out one that's the Trump rally effect. I've been watching this one because it's been outside the monthly Bollinger Band for a while now, and I haven't looked today to see if it's back in yet or not. But right now we're testing this lower band in this upper distribution. So definitely we've already broke out of the uptrend, and if that trend continues, this would probably be a very good area to start looking for a short, because this thing has come considerably ways from earnings. So I think there's quite a bit of opportunity for Marriott to the downside if we're going to continue the same rotation we saw today. I want to finish off with the XLF, the financials index, and this is amazing just how much of this move it took back today. It came down, broke down, it was breaking down below this trend line, you know, and we do have a humongous, or a squeeze, Bollinger Band squeeze here, so anything can happen on this financials. But we had a stronger dollar and a lose my train of thought, wait a minute, and higher bonds, and bonds rallied all the way into the close, but the XLF did not sell off into the close. So just keep that one in mind. There's still plenty of bullish appetite in the markets, but we really need the bonds and gold to start losing some ground, which could very well happen tomorrow. So, and I do think the Qs are going to continue to lead us into Monday for Netflix's earnings. That's all I got to say.